Hi guys, thanks for joining with me today. I appreciate you watching the video. If you can, hit the like button and the subscribe button. I'd appreciate it. You can see my videos, answer any questions you may have. You can place those in the comments. Um, but today I wanted to kind of go over term life through whole life. And the reason for that is I get a lot of questions of, what kind of life insurance policies are there? What kind of coverage is out there? And really there's so many more than to just go in through in a couple of minute video. But I wanted to kind of go over the main two, I guess you can say. And there's different sub brackets from those, but the main two concepts in life insurance are term life and whole life. And a lot of times I get the questions of how does this apply to me and how could I utilize this and what have you. And I'll briefly kind of go over with them today just so we can kind of help get the concept of what these two terms mean and what it can mean for help in your life and with your family. So let me share my screen with you here. Before we get started, I do want to kind of just go over the concept of how we get the pricing for the premiums for life insurance. And you may already know this, but life insurance is primarily based off of these different factors: your health, your age, your gender, and your medical records. Um, and sorry, guys, generally speaking, women have, the gender factors in, women have better rates than guys do. I guess, you know, studies have shown they're a safer bet than we are, I guess. But the two different types here that we'll kind of go over briefly is term life and whole life. And the way that I like to kind of explain it is temporary coverage versus permanent coverage. And there's a place for both of those. There's a place for both of those in our lives. But the way that I like to kind of describe these two is I have term life as a rental. It's kind of like, like if you're renting a house. You have that coverage. You may have a lease on that house for a certain amount of years or a certain amount of months. You have that point in time when it's yours and it's covering you and you can utilize it. It's the same way with insurance, with life insurance. So term life is like a rental, and it's usually for a set amount of years. Just like in a rental house, you would have a lease. It's kind of the same concept. And generally speaking, there's different ones out there, but generally speaking, it's 10 years, 20 years, 30-year term. And if you've probably have heard those sayings before, if you've ever looked into insurance. And the way that I kind of describe it to people is you have, let's say you're 30 years old and you have a 10-year term. So you've been paying your premiums, your coverage is good, and 10 years come and go and you haven't passed away. Praise God, hallelujah. But now what does that mean? Now you don't have your coverage. So a lot of times what the insurance companies will do is they'll allow you to either renew your insurance policy or sometimes convert it. There's a couple of different things that you can do there. But looking at a renewal here, so you just want to renew that 10-year term. I want it for another 10 years. And so you go back to your insurance company, and what you'll find is that the price has gone up significantly. Well, why has the price gone up significantly? And usually it's because of the primary factor, your age. Your age has gone up. You're now 10 years older than when you had it the first time. And your health may have decreased. You may have had a decline in health, and those are factors that play a part in that as well. So usually with term life, when you go to renew it, the price is significantly higher than what it usually is. And then you have a termination period, and that's usually at a set age. So you can renew it up until a certain point in your life. Most companies, that point in time is 65. You can't renew it up until 60 after 65. Some companies, there's a few out there that will do 70. And then what we have found kind of with term life is that the payout is less than 1% nationwide. Now you can expect that's not necessarily a bad thing, because what we have found is that people are outliving their term policy. They outlive that term. Now a lot of times the factors into this equation is that people for their jobs, they have what's called group life insurance. So that means they get a group rate through their employer, which is great, but usually those are about a 1-year term. So what that means is that every year you're going to pay a little bit higher if you have to pay any out of pocket for that. Depending on how your employer has it set up, you may or may not have to. But then, so that 1-year term kind of plays into a part of this 1% national average. Now, obviously, usually people are going to outlive that 1-year term, but it's there in case they need it. So whole life is a little bit different. I kind of equate it as having a mortgage instead of a rental. So it's something that you own. And there's a couple of different types of whole life. I'm not going to really get into that right now. I just want to look at whole life as a whole, no pun intended, but the whole life concept as a whole. So usually those life insurance policies is something that you own. You own it. And what that means is the benefits are fixed for life. So those benefits are going to stay with you until you either cancel your policy, depending on the policy. There's a couple of different things that you could do, but either generally speaking, you cancel your policy, you do what's called the reduced paid up, which we won't go into now, but I'll go into in a different video, or you pass away and it pays out a death benefit. So those benefits are fixed for life, and also the premiums are fixed for life in most cases, depending on the company that you go to. But generally speaking, the premiums are fixed for life. So you're not going to have to pay a higher amount for this coverage when when you get older or when your health declines. That's going to be set in stone. It'll be flat across the board. And then generally speaking, the whole life does not expire, and most of them, I'll put it that way to be safe. Most of them will build a cash value. So most of the time, companies will pay out a certain amount, a certain percentage in dividends. And this is when you look at, I'll just kind of go briefly onto a squirrel trail here, but when you look at some of the wealthiest people in the world and in the nation and what they're doing with their finances, and they're buying insurance, this is what they're looking for. They're looking for something that builds a cash value, usually tax deferred, and it has this set premium or the set dividend that will pay into this cash fund that's attached to their insurance policy. So most of them will pay into this whole life. Most whole life policies will pay out something similar to that. And then in later videos, if you guys are interested in hearing more about the different types of whole life, we'll start doing some whole life videos and different types of whole life coverage and what you can get. And then the last one here is it kind of provides a peace of mind and security. Your family knows if you've told them, if you have it set up, something like that, that it's not something that you can outlive. It's something that's going to pay out eventually. It's something that's going to be there. And so it has that peace of mind and that security. So I won't go into too further details about this. I don't want this video to be too awfully long, but I just wanted us to kind of get a general concept between term life and whole life. Now you may say, well, what is something that we would use term life for? Well, I'm glad you asked. That's fantastic. You read my mind thinking that question. It's a perfect question to ask right now and segue into this different topic. But term life is, for instance, it's something that you could utilize for like a mortgage coverage. So a lot of times what people will do is they'll set up a term life policy. That's the amount of their mortgage, of what their house costs. That way, if God forbid, if something happens to them, that money will pay out and will cover the mortgage. It'll pay off the house. Now the family doesn't have to worry about paying that mortgage bill every month. It's taken care of because of this term life policy. Okay, well, that's great. So what is something that we could use whole life for? Well, whole life, I've seen it used for a lot of different things, but one of the things that will play in kind of well to the peace of mind and security is your funeral policy. You can use a whole life policy to pay off your funeral ahead of time to make sure that money is there and ready, and no matter where you are if you decide to move or what have you, you have this insurance policy that will pay out. It's whole life. It'll be with you until you pass away. I don't think any of us here have found a fountain of youth yet, so we're all going to pass away at some point in time in our life. That's the inevitability. So with that being said, if we have this whole life policy that is attached to us and will stay with us until we pass away, then we can utilize that to pay off our funeral. And then that way the family doesn't have to worry about that extra financial burden when they're grieving from a loss of when we pass away. I hope that makes sense for you guys. Like always, there is a link at the bottom of this video if you would like to meet with me, and if you have any questions, I'd be happy to answer those for you. Or if you just have some general questions and you want to put those into the comments, I'd be happy to answer those and continue to make some more videos that will answer these questions. But if you can do me a favor, hit that like button and subscribe to the page. I appreciate you so much. You guys have a wonderful rest of your day.